Hey, what's up, guys? It's Friday about 2:45, so the market will close up in about an hour here. But we just opened up a new trade in my mastery group with a short position here in Tesla. So we'll take a look at the trade. We'll discuss the targets, the risk versus reward, and I do want to discuss why did I go with a call credit spread as opposed to some puts or a put debit spread. So the new trade, and as always, guys, in the description for this video, I'll have the link for the 30-day trial to the mastery. $7 for 30 days. Come on by. We trade live about 2 times per week, and of course you can access the trade alerts for trades just like this one. So, November 18th, 300-305 call credit spread. So a pretty deep out the money call credit spread, and let me see the math here. Tesla currently trades around 267. And with a short call up at $300, we've got about 12 to 13% cushion. So as far as the bearish case here for Tesla, I do think it's pretty simple. This takes out support at 265. There's nothing as far as technical support to save it until you're back down here like 20% lower at your June lows. So under 265, I do think you start to see the stock free fall a little bit. And then as far as a few other problems of the structure here, notice how over the last couple of days, we got that negative cross with the 21 EMA falling under the 50 SMA here on the daily chart. A further indication, everything is starting to shift here for the path of least resistance to be to the downside. So you're hanging out at key support. You've got a negative moving average cross on your daily chart. Now look over here, guys, in the right-hand corner at the big 3 indicator. 1 hour, 30-minute, 15-minute, 5-minute sell signals. So in other words, as we're hanging out at key support here, the 1 hour, 30-minute, 15-minute charts, they've gone into a downtrend. The EMAs are stacked negatively. The 10x bars are red. You got the that negative moving average cross. Unless the bulls can clean up the structure to the 5-minute, 15-minute, 30-minute, 1 hour, right, which of course is a bit of a tall task, the break under 265 probably takes you much, much lower. So that's the structure as far as looking for a push into lower prices. Now, as far as why I went with the call credit spread, here's the quote-unquote difficulty of getting short right here. As the S&Ps continue to trade lower and lower, we're a little bit oversold. And frankly, guys, that's like the only thing the bulls have potentially working in their favor right now. We are a little bit oversold, and of course, anytime we're oversold, there's the chance of a short squeeze. So the point being, even though we're getting a great entry, getting short Tesla today, not too far from that daily 21, the S&Ps, the QQQs, everything else is pretty oversold. So the old saying is, as goes the S&Ps, goes the stocks. Meaning, if the S&Ps, rally next week and squeeze the shorts, probabilities suggest you're probably going to see a rally here in Tesla. So any strength in the S&Ps and the Qs next week, in the short term, that trade probably goes against us a little bit. So going with that call credit spread gives us a lot of flexibility. Imagine instead, guys, we bought 245 puts that expire in a couple of weeks. Now we're in a position with that trade. We better see Tesla roll over immediately. Going with that call credit spread puts you in a much more comfortable position. Tesla looks like a short. Right? Takes out 265. It probably rolls over. But in the event the S&Ps and the Qs heat up a little bit next week, we've got plenty of time on the trade, almost 50 days till expiration. And of course, the reality of a call credit spread is, come expiration, all we need is Tesla under 300. So we got a good, 12 or 13% cushion. So the other thing with the call credit spreads is, you want to make sure you're selling spreads and locking in a good risk versus reward. So a good example here, guys, this is my smaller account. So I got a bigger position in my Tasty account, but on the smaller account here, I sold 6 contracts. If Tesla can rally, we're going to add to the position. But for now, we got 6 contracts. So, there we go. So in terms of risk versus reward, let's say into the end of October, Tesla rallies all the way back to $300. On 6 contracts and a push up there to 300, I'll be down about $500. again, a smaller account, but $500 of risk on a rally back to $300. In comparison, the max profit's closer to $900. Now, I'm not going to look for the max profit on the trade. What I'm going to look for is about 80% of max profit. So there's a good risk versus reward trade. All I need for Tesla to do between now and November's expiration, and of course, guys, if it rolls over, we'll get our profits pretty quick. But all in all, as long as Tesla's under 300, slowly but surely, that trade's going to bring in the premium. If the market can trigger a short squeeze and Tesla rallies all the way back to 300, on a trade that could make me about $1,000, I'm only going to be down about 500 or so. So that's the key with credit spreads. Don't get too caught up in the max loss versus max reward. Focus on the risk versus reward between your targets. So if I'm going to cut the trade loose and a move back above 300, and I'm looking for a move down towards 205, all said and done on 6 contracts, I'm risking about $500 to make about, let's call it $800. I like that risk versus reward. And again, in the event we do rally next week, I'm looking to add a little bit more to that short position. But food for thought there, guys. It's not that you want to necessarily live in fear of the short squeeze. It's a bit more, all right, the market looks like shit, but we are a little bit oversold. So I think one of two things happens from here. We totally fall apart and the market dies next week, or the bulls finally trigger a little bit of a short squeeze. Taking that into consideration, out the money put debit spreads could be a little bit uncomfortable. A deep out the money call credit spread with plenty of time till expiration that still offers close enough to a 1 to 2 risk versus reward sounds pretty good in my book. So that's a new trade, guys. We got that open today, and we've got some put debit spreads here on Snowflake, looking for a big flush as that daily squeeze starts to fire short. And as far as putting on any bullish trades, well, there's a lot of problems that have to be fixed before we think about that. So there's a new trade, guys, and as always, check out the link in the description for the 30-day $7 trial. And as a reminder, for those of you already in the mastery, Sunday morning, 9 a.m. Central, I'll be live for a little bit of weekend prep. We'll go over our notes, we'll update the game plan, we'll run a couple of scans, we'll have a good time as always. But there you have it, guys. Short and sweet video. New bearish trade on Tesla. November 18th, 300, 305 call credit spread. As always, I'll keep you posted on that trade and anything else we open up here together over the next few weeks. And until the next video, have a good weekend, guys. Sunday morning, I'll have the weekly watch this video posted. Until then, go on ahead and hit the like button, hit the subscribe button, and I'll talk to you guys soon. Deuces.